Alright guys, let's get started. Welcome to another episode of Crypto Corner. This is the weekend edition. Saturday today we're gonna analyze the charts, especially Bitcoin, because we are in Bitcoin season. The Bitcoin dominance has grown a lot over the last few weeks with this pump of Bitcoin, and as you know, the alts are trying to catch up, but they're failing. I mean, yes, everything is on the green today. We see some altcoins like Litecoin jumping by 6%. Litecoin is having a halving in about a month from now, in about 30 days. Maybe it's even less. Let's actually find out. All right, well, it's 39 days from today. It's expected to be on the 2nd of August. So a month before, pretty much a month before the halving, it is natural to see a pump in Litecoin. I would have expected much bigger pump, to be honest. I mean, it's 18% up in the last week, far more than any of the other coins, even more than Bitcoin. Bitcoin is up 15% in the last 7 days. So yes, definitely Litecoin is making some moves right now, but still quite conservative moves compared to many other altcoins. Of course, it is a larger cap altcoin, so it's not easy to move in big percentage rates. You know, it's not going to move by 20 or 30% in a day or anything like that, but you know, on the weekly or the monthly, I would expect to see a 20-30% move in Litecoin. We'll see how it goes. So far it's 5.88% up in the last 24 hours, by far the biggest gainer here in the top coins, but definitely we are in a Bitcoin market as of right now. This is the token metrics, one of the token metrics indicators, and this is the one that actually measures whether we are in alt season or Bitcoin season. And as you can see right now, we are pretty much low here in the Bitcoin season, very close to max it out. I mean, the Bitcoin this is because of Bitcoin dominance, and as I said, Bitcoin dominance has grown significantly over the last few weeks. We are currently sitting at 51%, over 50%. This has not happened since all the way back here, April 2021. So during the previous bull market was when we were seeing Bitcoin up in these high percentage rates. It actually managed to reach 73% back in December 2020, but since then it's been on a decline. Even at the peaks of the previous bull market, it only managed to get to about 49%. So for the first time in more than 2 years now, we are seeing Bitcoin climb above the 50% mark in terms of dominance. This is why, again, I will be charting Bitcoin today, because we have to see what Bitcoin is going to do. I'm expecting a correction, and if we see a correction in Bitcoin, we're going to see all the alts bleeding as well. Only a consolidation right now in Bitcoin is going to push the alts upwards and help them, you know, catch up a little bit at least with Bitcoin, but a drop in Bitcoin is going to cause a drop in the altcoins. So it's very important to monitor what Bitcoin is going to do. Now let's go into the charts. Alright, well, let's first start with the daily chart on Bitcoin. Bitcoin managed to see a very strong rally in the past few days. If you recall, in my previous video, I was talking about the fact that we broke above these resistance lines here, and the next target was clearly this resistance line. And as you see, this is sitting at 31,000. And this is precisely what we did. We actually came to test this resistance. We very briefly managed to break above it. Let me go on the smaller time frame so that we can see that more clearly. And also let me take out the Aurochs indicator. This is the red and green dots, because we don't really need that. We can see what's happening on the chart. We broke above this resistance here, and for a few hours we managed to actually stay above it, giving false impression to many, you know, who were longing Bitcoin at this point. This was more of a liquidity grab here, and now we are retracing. We're already starting the retracement. But is this going to turn into a full-on correction, full-on pullback? I'm not really sure. I feel that this 9th moving average that is sitting as a support, that we have already, you know, used as a support a few times, this is pretty much what's happening right now. This is acting as a support, and if we don't break below this moving average, we can make another push on the upside, perhaps even going to the 32,000. It's important that we prepared for this move as we actually broke here above the 27k. This was a very important resistance, and as you saw, we broke above this with quite a lot of velocity. We already saw an indication of this move coming when we were holding the 21 and the 34 weekly moving averages. This is the weekly here. So you see, this is the cyan and the magenta lines. These two lines, as we were holding above these moving averages, and very briefly we retested the support of these moving averages, but at the time I was drawing them here. Of course they have moved now, but at the time they were actually here. So as we managed to hold these moving averages as support, this indicated that a move on the upside is coming, and that move followed very shortly. So as you see on the weekly, we have this huge green candle here that break above this resistance trend line. This breakout above the resistance trend line was everything that I wanted to see, and this opened the door for Bitcoin to going to 40k. As you know, these are my targets on the upside. I have 34,000 as one of the major resistances on the way up, and then 38,000, also a major resistance on the way up, after which I have the 41,000 as the ultimate target on this up move here. Of course, these resistance lines indicate the points where I'm expecting to see a rejection at first and a pullback or consolidation. But if we only have a consolidation here at this price level, is going to be great for us, because it will definitely push us towards the 34 and then the 38,000. So by all means, it appears that Bitcoin has finally caught up with the stock market, because the stock market also did a quite a pump over the last week. And at first, actually, Bitcoin was still was still struggling here at these bottom levels when the stock market already started its push on the upside. But Bitcoin now managed to catch up with it. However, this strong and rapid rally over the last week, and this is the 2-day chart, has made Bitcoin overextended and overbought. We can clearly see that in the stochastic RSI and the simple RSI, both of them in the overbought region. If we look on the daily, it is the same picture. In fact, on the daily, we are already seeing a bearish cross here in the stochastic RSI forming, indicating that a pullback is to be expected. The 12-hour chart is also pretty much the same picture. We've been in the overbought region for quite some time now here on the 12-hour chart, and also the simple RSI is also in the overbought region. Both of these are indicating that a pullback is definitely coming. Now, the shorter time frames, however, paint a slightly different picture. The 4-hour chart on Bitcoin is showing that we are in the oversold region in the stochastic RSI. So in the short term, over the next day and over the next few hours, over the weekend, I'm expecting that we will continue the push on the upside. We will continue to be here in this 31,000 region, and perhaps even trying to break above the 31,000 region, but this is going to be short-lived in my opinion. I expect that next week we are going to see a pullback, most likely retracing here to these support levels here. This is the 30,000. And we could even challenge the 28,900, 28,800 level, which is also a support range. So this is what we can expect when we start the pullback. These are the two levels that I'm expecting to see us challenge. Right now, the daily 9th moving average is sitting at this 28,800. So a pullback to the 9th moving average is the most likely scenario. This often happens when we are pumping. And as you can see, a lot of the times when we retest this moving average, if it doesn't hold us, then we pull even deeper, we go even lower. But that doesn't necessarily have to happen. As you can see here, we had a rally, then we had a pullback, which actually took us to that 9th moving average, but we confirmed it as a support, and then we pushed even higher and higher, until at some point, as we were challenging that 9th moving average, it gave up and then we dropped. Then we made that pullback. So this is another scenario that I'm looking at for Bitcoin. This is also a possibility that right now we only see a consolidation like what we did here in January of this year. a minor consolidation, a little bit of a pullback, but then another push on the upside, taking us to new highs. And only then, as we were challenging that moving average, that support level here at the 9th moving average, we could actually find a rejection point, after which we can make a bigger, more decent pullback. And in this case here, back in January and February, this pullback took us to pretty much the same levels as this consolidation. So if something like that is to happen with Bitcoin this time around, then we can see a consolidation here, a push on the upside, perhaps to the 32,000 at least, and then a pullback that can take us just to these same levels around 30 or 29,000 where we are currently. But if we talk about a pullback, and if this pullback is to start already, or if this is really the highest point that we have reached during this rally before the pullback, then we can assume the following. Well, the first support is in fact sitting here at 29,700. So Bitcoin would have to fall below this level here, below 29,700, to increase the odds of a proper pullback. Because if we actually just drop to this level, we can bounce up from here, and this is not really a pullback, this is just a consolidation. So it's important for a proper pullback of Bitcoin, it's important to break below this level here, below the 29,700 or around this price, to increase the odds of a pullback. So if this is to happen, then we can look into Bitcoin dropping to the lower support, which, as you see here, this is the 0.382 Fibonacci level. This is at 28,800. So potentially Bitcoin can drop again to the 28,000 region only if we break below the 29,700 level. So this is a very important level to watch here. And as I said, if Bitcoin doesn't drop below this support level here, we can see another push on the upside that most likely will take us to around the 32,000 range, in mid 32,000 range. And once we get there, I'm expecting to see a lot of selling pressure around this level, a rejection from this level, and then a pullback. After which, of course, I have my higher targets here as well. But the first resistance, if we are to continue this bull rally here, the first resistance is really that 32,000 range. And as I zoom out, we can actually see why this is a resistance here, this 32,000, the higher 32,000 range, is because previously we used this as a support. So this is one of those, levels that we have established during previous price action. So from previous price action, I can conclude that 32,900, pretty much 33,000 actually, definitely a strong resistance for us. So this is why I'm expecting that if we don't make the pullback right now, we can continue, we can touch this level very briefly, find the rejection there, and then start a proper pullback. Now, I know that many of you guys are asking me about signals or trading bots. I actually talked about a trading bot that I researched recently. If you missed that episode, let me bring you up to speed. It's called Stoic AI. It currently boasts an impressive user base of 15,000 users with assets under management totaling over $130 million. It's developed by a private company called Syndicator based in Gibraltar since 2015, mainly focused on building predictive analytic tools by merging collective intelligence and machine learning models. Of course, the advantage of using an automated trading software, or as we call it, a trading bot, is that it takes out emotion from your trading game. We're all guilty of getting emotionally attached to certain coins, right? On top of that, we also often get caught up in FOMO and hype and make spontaneous decisions that we later regret. All of this is solved by using a bot because it makes decisions on preset parameters and zero emotion. This bot uses artificial intelligence to further enhance its precision and speed far beyond human capabilities and delivers better results than the bots that I've tried before, so a good reason to give it a try. I've done extensive research on this one before I decided to feature it here, and from what I'm seeing, it's been hailed as the best bot out there. One of the primary reasons for this is its algorithmic efficiency. It can process vast amounts of data in real time, analyze market trends, and execute trades with precision, which allows it to identify profitable opportunities and make informed decisions faster than human traders, giving it a significant edge in the market. The bot will monitor your portfolio and automatically adjust investments based on market conditions. This can help us avoid losses and generate higher returns. It analyzes various cryptocurrencies and selects a portfolio that meets your risk profile and investment goals, offering a diverse portfolio of cryptocurrencies which can help spread the risk, of course. It's already been featured on Bloomberg, Nasdaq, The Verge, and Fidelity Investments. And I've already talked about the 3 strategies that the bot offers, but they made some changes and just released a new and improved meta long only strategy that maintains solid returns under multiple conditions. You see, in previous bull cycles, narratives like Ethereum killers in 2016 and 2017, or DeFi in 2020, NFTs and gaming in 2021 drove excitement and price movements. However, the current crypto landscape lacks a cohesive narrative, except for recognizing cryptocurrencies as a store of value due to issues in traditional finance this year. But just in the past 4 months, Bitcoin dominance has increased by over 15%. This is an auto-tuned portfolio strategy that leverages a dozen long-only sub-strategies simultaneously. This unique mechanism is put in place to rigorously outperform the crypto market's price development over time. This new meta long only holds over 100 plus sub-strategies in its arsenal, incorporating diverse ideas based on years of quantitative research. Each particular sub-strategy is assigned weights based on actual performance, which is also known as rebalancing. So the meta long only swiftly adjusts the weights to favor the top performing ones in the current market environment. This chart displays metrics from January 2021 up until present time. Meta long only is the strategy marked in purple, and it's outperforming the most popular crypto indexes: top 10 equal weighted and top 30 capital weighted. The top 10 equal weighted index is where the 10 largest tokens by market cap all get equal 10% share. The top 30 capital weighted index is where the 30 largest tokens by market cap receive share size proportional to how large their market cap is. And this chart shows how meta long only changes its allocation between Bitcoin and altcoins. The strategy increases the portfolio's share in Bitcoin, the purple line, during times when Bitcoin market dominance, which is the light green line here, starts to increase. For example, at the beginning of this year and in March, when Bitcoin was outperforming the market due to the US banking crisis, meta long only reflected this and allocated more weight to Bitcoin. Thanks to this algorithm, the strategy adapts to different market environments. It's a strategy that is suitable for investors seeking superior exposure to the entire crypto market long term and those prepared to weather the market volatility. It replaces their previous long-only strategy, which was initially on track to outperform its benchmark, but after the team performed deep analysis on its parameters, they noticed that since March this year, the strategy has underperformed its benchmarks that have a substantial allocation to Bitcoin. So they decided to pivot their product and offer an alternative strategy with added allocation to Bitcoin. Once per week, the bot selects the top 20 sub-strategies from its pool of more than 100 strategies, as I mentioned, and also once per day, it assigns weights between the top 20 sub-strategies, and the weights amongst these sub-strategies are adjusted on an hourly basis. Now, in order to use the meta long only strategy, there are 2 requirements. First, you have to be using Binance Global, not Binance US or Coinbase. And the minimum amount is $1,000. It's a high threshold, but frankly, I don't mind that, as I trade with much larger volume than that, so this works for me. The reason it's Binance Global and not Coinbase or Binance US is because Coinbase has too high fees. So that will eat up your margins, while Binance US is having a problem with their liquidity right now since the SEC lawsuit started. And Binance Global continues to be the leader right now. So those who are able to use Binance Global are at an advantage here. Another advantage to using the Stoic AI bot is that it's safe to use. Your funds will never leave your exchange account, and management is only through APIs. This way you're not at risk of someone freezing access to your funds, and that's a big deal. As someone who's had my fair share of trusting companies with my money in the past, and eventually losing lots and lots of my crypto due to bad actors who would do a rug pull, I never trust a company that requires me to deposit my crypto to their own platform. I don't advise anyone to do that. Instead, make sure that you use a service that allows you to keep your capital on your own preferred exchange and only give it permission to trade, but not withdraw your funds. This is how it works here, and that's a good thing. Plus, this bot is designed to work even if you have no knowledge or experience in trading. Its algorithms are doing all the work for you. They're now rapidly growing their community, and they're going to launch a new loyalty program, which brings together both referrals and regular users. Everyone will receive bonuses, and there is an opportunity to be among the first active participants. So grab the link from the description below. I dropped all of their socials there too. Check it out, give it a try, see if it beats your performance. I think it will. Alright, and back to the charts now. This is the weekly chart. I want to show you a couple of other things here that I'm looking at. First of all, let me remove that, because this lower support, I feel at this point is quite clear that we are not actually going all the way down to this lower support here. I would still keep the marking, because it is possible that in the future, if we make a bigger correction or something, we could actually come all the way down here. But at this point, for right now, this is out of the picture. I don't really see it happening. Also, let me remove my Fibonacci levels. So on the way up, we already established, the levels. On the way down, we know that we have this first support here at these levels at around 29 and 28,000. However, let's look at what's going to happen if we start a correction, and if that correction actually breaks below these levels. What could happen if we break below these first support levels? Can we go even lower? And it is possible. As I said, this support level here of 27,700 is a crucial level for us. But if we break this level, then we are opening the door to going all the way back into the 26,000s. And even if that happens, it is still going to be just a pullback, a correction, very similar to what we did here. And after that, we can continue our bull rally. We can come and retest these levels and then start breaking above them, and then move towards the 40,000, which is my ultimate target here before we see another major correction. But if this is to happen, then we have to really closely watch these levels here at, the higher 26,000s, 26,600, 26,700. These levels here are really important. We have to, any pullback, however deep right now it could be, has to stay above these levels, because if we actually break below these levels, then we can consider this here to be a fake out, and it will increase the odds of a continuation of the downtrend. So this is another, and of course, then we can talk about revisiting these lower support regions and even breaking below these lower support regions. However, this is not really the most likely scenario. It's just one of the possible scenarios. And as you know, technical analysis is about possibilities and probabilities. So I'm giving you all the possible scenarios, but of course, the most likely, the most probable scenario to me is that we actually consolidate around this level here, maybe a minor pullback towards the 9th moving average on the daily. Let me just go back on the daily so that we can see it more clear. A pullback towards this 9th moving average, establishing it as a support, and then bouncing yet again on the upside, continuing all the way to 32,000, perhaps even 34,000 before we see a deeper correction. This is really what I'm expecting for Bitcoin right now. Alright, well, this is everything for today's episode, guys. Thanks for staying until the end of the video. I hope this analysis helps you, and if you have any questions or any suggestions for topics that you want me to cover, things that you want to ask me, drop them in the comments below. Don't forget to leave a like, and also check out all the links in the description, where I drop the links to all of the crypto services that I'm personally using and that I recommend to you. And while you're here, just pick another one of my videos, and I'm gonna see you there.